Welcome to Lesson 3. This should be a fun one. In this video, we'll be explaining who's involved in the foreign exchange. The superbanks. Since the Forex market is decentralized, it is the largest banks in the world that determine the exchange rates, based on the supply and demand for the currencies. These large banks, collectively known as the interbank market. These banks take on massive amount of Forex transactions each day, both for their customers and for themselves. You could say that the interbank market is the foreign exchange. Large commercial companies. Take Apple for example. Apple must first change its US dollars to the Japanese yen when purchasing electronic parts from Japan, thus fluctuating the USD JPY. Governments and central banks, such as the European Central Bank, the Bank of England, and the Federal Reserve, are regularly involved in the Forex market too. Central banks affect the Forex market when they adjust interest rates to control inflation. The speculators takes a small portion of the market, but that is you and me. Those four categories are what control the foreign exchange market. As speculators, our only goal is to make money. Don't worry, once you graduate the ForexBlade University, you'll be confident enough and have the skills to trade on your own. But let's dive into the history of Forex. At the end of World War II, the whole world was experiencing so much chaos that the major Western governments felt the need to create a system to stabilize the global economy. Soon enough in 1971, the BWS was replaced by a different currency valuation system. The currency market evolved to a free-floating one, where exchange rates were determined by supply and demand. In the 1990s, thanks to computers and the booming growth of the internet, banks began creating their own trading platforms. With hardly any obstacles to entry, anybody could just contact a broker, open up an account, deposit money, and trade Forex from the comfort of their own home. Brokers basically come in two forms. The first is market makers. As their name suggests, they make their own bid and ask price themselves. On the other hand, electronic communication networks, otherwise known as ECN, use the best bid and ask price available to them from different institutions on the interbank market. How market makers make their money is through something called a bid and ask spread. In this case, 0.0002 is the spread. Although that spread might seem small, when you're talking about millions of these Forex transactions every day, it does add up to create a big ass profit for the market makers. On the other hand, ECN provides you the best bid and ask price. They charge a very small commission fee, and ECN brokers come out cheaper than market makers.